Today on Forbes, how to pay less and stay safe as the tax code changes and the IRS crumbles. Tax filing season always brings lots of questions. This year, it brings more than the usual quantity, as well as greater risks for taxpayers who don't find the right answers. The IRS started processing 2025 tax returns on January 26, 2026, with an April 15 deadline, consistent with past years. However, the system's response to problems is expected to differ and more errors are anticipated this year. After funding cuts, retirements, and reductions initiated by Elon Musk's Department of Government Efficiency, or DOGE, the IRS workforce dropped by a staggering 27% in a year, impacting all essential functions from phone support to return accuracy resolution. The Treasury Inspector General for Tax Administration warned of potential struggles, noting that by December 30th, 2025, the agency had hired only 2% of authorized submission processing staff. This failure to hire was due to new Trump administration red tape and delays from last year's 43-day government shutdown. While automated e-file returns are processed efficiently, issues requiring human review like amended filings, ID verification, or error flags will be significantly delayed. Callers seeking help should expect longer wait times or may not get through at all. Tax rules changed this year due to President Trump's so-called One Big Beautiful Bill Act, or OBBBA, signed in July, retroactively creating temporary 2025 tax breaks for tips, overtime, seniors, and car loans. This adds complexity and forms, especially for the 45% who file themselves. The OBBBA also temporarily raised the state and local tax deduction limit from $10,000 to $40,000, which may require taxpayers to reevaluate itemizing deductions versus taking the standard deduction. IRS information is out, but confusion and politically driven misinformation persist, leading to filing errors. The changes, as well as their last-minute nature, increase the likelihood of filing errors, particularly when taxpayers misunderstand eligibility requirements or can't make sense of their documentation. One example, most 2025 Forms W-2, the ones employees get from their workplace, won't break out overtime separately. Another, some seniors who get a 1099 SSA might not realize they still need to report their Social Security benefits as taxable income. That's because President Trump's boast of, quote, no tax on Social Security is simply a bigger additional deduction for seniors, one that phases out as incomes rise. Some of the confusion will inevitably show up in the returns of taxpayers who are doing their best to comply. This could push these folks out of the fast lane of automated processing into a slower lane requiring intervention from the depleted IRS workforce. Even minor issues like a misunderstood credit or missing form can cause significant delays. The IRS favors quick electronic refunds via direct deposit, which is fast if bank info is correct. However, those without accounts or uncomfortable with direct deposit face a slower process for paper checks. Supplying incorrect bank details will cause delays and require extra, time-consuming back and forth with an understaffed agency. To avoid delays, file electronically, double-check your information, include all documents, and use direct deposit. Most returns are processed within 21 days. Returns filed by mail could take 6 weeks or longer, especially if corrections or extra review are needed. Amended returns average 5 months or more to process, adding to the IRS's existing backlog. Taxpayers should prioritize accuracy over speed and patience above all. The system favors correct, straightforward returns. It's much less forgiving if yours isn't. If you can't meet the April 15th deadline, file an automatic extension rather than submitting an incorrect 1040. Stay informed with the Forbes Tax Guide for the filing season. It covers everything you need to know about changes, filing status, the new tips deduction, and more. For full coverage and access to our free tax newsletter, check out Kelly Phillip Erb's piece on Forbes.com. This is John Palmer from Forbes. Thanks for tuning in.